Hi, welcome to the Veranda Financing Podcast, where we help entrepreneurs grow and build their businesses through education, insightful interviews, and appropriate financing. I'm Christine Mills. Today I'll be discussing the 5 biggest myths about business loans. 5 biggest myths about business loans. 1, business loans will make my business profitable. I have heard people say that over and over again, and that is actually false. Profitability for a business comes from revenues exceeding expenses. So your sales, you're making more money with your customer, your product, than your expenses. So the only way we can grow our companies, our profitability, is by increasing our number of customers, increasing our prices, diversifying your product mix, and managing our expenses. Business debt may actually decrease your profitability, especially if you have high interest rate loans. Business debt will have principal and interest, right? So your loan interest payments are taken out of your expenses. So business loans will not make your business profitable. So that's myth number 1. And I'm letting you know that is actually not true. Business loans cannot make your business profitable. 2, business loans will make me a better entrepreneur. Business loans are not a magic wand for bad management. I realize in business that throwing money at a problem will not change bad management. If you have problems securing customers, $150,000 loan is not going to help you. Coaching may help you. A new product may help you. Marketing might help you, but a loan will not help you. So it does not make you a better entrepreneur. I've met entrepreneurs who don't even have 2 pennies rubbing together, and they made a way out of no way because they have that hustle, they have that grit, and they are an entrepreneur, and they will make it happen. So a business loan will not make you a perfect entrepreneur, and it will not make you a better entrepreneur. In fact, it might make you a worse entrepreneur because now you have to manage the debt on top of learning how to run your business. Think about it. Someone who is bad with managing $50,000 is not going to be better managing $100,000. So it's a similar thing. Number 3, business debt is all high interest loans. Business debt is all high interest loans. That is not true. There are high interest loans out there, such as merchant cash advance loans, with interest rates that can actually go up to 24%, which is really bad. I would not recommend that for anyone. But there are many others that can be 4, 5, or 6% interest rate. Some government loans even have no interest rates that can be forgiven after 5 years. The key is to get the business loans that work for your business. Some companies, like a retailer, for instance, that may be waiting for payments to come in, may seek loans that serve as a plug for a cash flow gap. So, for example, you may sell your cookies to Whole Foods and you have a great product, and your customers are Whole Foods and Walmart, but they may not pay you until 3 to 6 months. During that time, you are still operating your business. You still have business expense, and you still have to make cookies to fulfill orders. Where does that money come from, since your major clients are paying you 6 months ahead? So this is a dilemma many entrepreneurs face each day. So in these situations, a short-term line of credit may be just right for you. Number 4, business loans will make my business grow. Yeah and no. Sales make your business grow, not debt. Debt can grow your business if you have made a contract and you have to fulfill your orders. So, for instance, a cookie company again. Say, for instance, you have Christine's Delicious Cookies, and Walmart and Whole Foods are calling, and Target's calling. You need money to fulfill those orders. So you need money to pay people to make those cookies, to buy ingredients, and so forth. So in that case, a business loan will help you grow your business. But if you're at zero and you've been at zero for 3 years and you still can't grow your business, a business loan is not going to help you. Business loans can provide you with the start, though. Some businesses, like service-based businesses, are not capital intensive. However, some, like real estate, hotels, restaurants, construction equipment, require capital. It requires money. What do you do if you want to start a business that requires a certain level of capital? Do you say that industry is just not for you? That's only a question you can answer. So as much as people are saying, oh, stay away from business loans, you don't need business loans, be debt free. If you want to start a crane business, it's very hard to be debt free unless if you're a millionaire. If you want to start buying hotels, unless if you have a lot of cash, and it's very hard to do that debt free. So be mindful of the type of industry you are looking into before you just say that, business loans are not for you. Number 5, business loans take a long time to get. Business loans take a long time to get. That's myth number 5. Not all business loans take a long time to get. I understand that now after 9/11. Banks are a lot more stringent on who they borrow, and there's a lot more steps that they have to go through to ensure that they know who they're lending money to. But my answer to this one is that it really depends. It depends on your industry. It depends on your requested loan amount. It depends on your credit score. It depends on how long you have been in business. The way banks are underwriting now, more and more loans are being automated, which makes it a much more streamlined process. Think Rocket Mortgage. They could let you know if you have a loan, if approval within a minute. So it's making it a lot faster to get the approval process underway. So loans do not have to take a long time to get. So I'm just going to go back over these 5 myths that I debunked today. 1, business loans will make my business profitable. No, they won't. The only way you can make your business profitable is when your sales exceed your expenses. Number 2, business loans will make me a better entrepreneur. No, it does not. You have to make yourself a better entrepreneur. Number 3, business debt is all high interest loans. And I discussed the different types of loans you could get. There are not high interest rates. Government loans, SBA financing. There are so many other ones that you could do that are not high interest rates. Stay away from merchant cash advances. Those tend to be very high or hard money. Number 4, business loans will make my business grow. No, the only way you can make your business grow is by being profitable, having a good customer base, and but that's not to confuse it with not being able to get a business loan to give you a good start with industries such as real estate, hotels, restaurants, and so forth. And lastly, business loans take a long time to get. And I discuss that with all the increase of automation with underwriting, that's not the case. You can probably get a business loan nowadays within a week sometimes. So I am so happy you stopped by to listen to the Veranda Financing Podcast. I hope this was very helpful information for all of you. If you have any questions or about ways to get the right business loan for you, or you just want to know if it's the right business loan, if you're in the right place to get a business loan, please reach out to me. My email address is info@verandafinancing.com. And thanks again for stopping by, and God bless.